In this video, I'm going to discuss 7 Social Security facts that every retiree must know. Coming up next on Holy Schmidt.
Holy Schmidt!
Hi everybody, this is Jeff Schmidt with HolySchmidt.com and welcome to another episode. This video is going to get right into 7 things you should know, and if you don't, well, this will help give you a primer on some of the facts that a lot of people in the Social Security game do in fact know and actually rely on. Point number 1 is that your payment depends on when you file for Social Security benefits. It makes a big difference if you file at 62 versus filing at 65, 66, full retirement age, or even beyond. And that decision is an entirely personal one. It depends on your individual circumstances, of course. At the end of this video, I will post 2 video links. One which discusses when it might make sense to file early, another that shows when it might make sense to file at full retirement age or even beyond full retirement age for those of you that have the wherewithal to do that. Point number 2 is that you need to qualify for Social Security benefits. It's not automatic. In order to qualify, most of the time you need what are called credits. You need 40 of them, and you get 1 credit for every quarter of work history that you have. So 10 years effectively, 4 quarters per year, and the minimum in 2020 terms that you need to earn in that quarter is $1,410. Incidentally, you don't have to have 10 straight years of work history. You just have to have 10 years of work history. Point number 3 is that your ROI, or your return on investment, is about 5% for middle income earners. What does that mean? It means over your lifetime, you're going to be contributing every year for 35, 40 years, most of you actually, and you will have contributed a certain amount of money to the government. That amount of money is paid back to you with growth. And if you're a middle income earner, the expected payback return on all of that money is about 5%. Now, if you think about what that means, practically speaking, if you took that same amount of money and put it in a mutual fund and you got a 5% return every year, it would be equivalent, more or less. Now, the difference, though, is the Social Security benefits also have a cost of living allowance increase, whereas returns in the markets may go up, they may go down, may go sideways. But there isn't generally an embedded cost of living in most investment options for people. Before we go any further, don't forget to smash the like button. That helps the YouTube algorithm recognize the video and it pushes it up in the rankings. And more importantly, it helps others find this information as well. Point number 4 is that your payments are adjusted for inflation. What that means is that you have what's called a cost of living allowance, or a COLA. So every year the government prints a number that represents the inflation for the period, for lack of a better term, but basically the increase in costs for the average basket of spending that most retirees and others would in fact have in their day-to-day lives, and you get a cost of living, or a COLA, increase. Point number 5, you can actually collect Social Security while you're still employed. Now, there are limits to this, and if you work and collect Social Security before you reach your full retirement age, there's a possibility that the SSA will withhold some of your benefits. A lot of that, in fact all of it, depends on how much you're earning in your job while you're collecting Social Security benefits. And I have other videos here on YouTube which talk specifically about this point. In fact, there's a video called The 3 Secrets of Social Security that most people don't know. So look for that in my collection and that will speak to this point. The next point is that you can change your mind. So if you file for Social Security and all of a sudden you have a windfall, an inheritance, a new job, or something else, you can change your mind and unfile. But you have 12 months to do it, and you have to pay back the benefits that they've given you. So it's not a free option, but if you are inclined, all you need to do is fill out Form SSA 521, and that will be the start of the unwinding of your filing. The final point is that your spouse gets benefits off of your earnings history as well. This is particularly useful if your spouse never earned an income while you were working, because they still get 50% of your benefit in most cases. Gang, that's it. Thanks for watching. If you like this video and you want to see more of me, make sure you hit subscribe and notifications below. Also, as I said earlier, if you're interested in videos on when to file early, when to file at full retirement age or beyond, this one gives good information on when to file early, and this one gives good information on when to file at full retirement age or later. This is Jeff Schmidt. Thanks for watching.